What's going on, everybody? Welcome back to another episode of Blazing Crypto Profits. So we're back at it. We're back here again. We're on the third intraday setup that we're going to be teaching about. It's called the opening range breakout. Now, this is also a very special, very powerful pattern that will allow us to get into hot stocks, the best stocks, early in the trading day. Knowing this strategy will allow us to capitalize on some of the hottest stocks in the market today, like BPTH, MBOT, ZSAN, KEG, all of these nice stocks that have been flying around recently. ACIA, BIOC, so many stocks flying around, guys. So let's just dive into this opening range breakout and breakdown setup if we're thinking about going short, right? So let's just go ahead and get into this. So the opening range breakout or breakdown is another type of opening trade that is designed to get you into hot momentum stocks at the beginning of the trading day, meaning it's designed to get you into stock in the first 15 minutes of the market open, right? Now, again, starting from the daily chart for the idea, we look for the setups intraday. We start from our daily chart, then we go intraday. That's where we want to look for this ORB, intraday, at the beginning of the day. The rules of the opening range breakout or breakdown are: you look for 2 to 3 5-minute candles going sideways. This will be our range. Now, me particularly, I like to use the 1-minute chart. So I think that you can play. I've played the the ORB on the 1-minute chart. But the thing is, you want to stick to that 5-minute window. That 5-minute that 3 sideways 5-minute candle window. You want to stick to that, right? You want to give the market some time to kind of shake itself out, and then establish some highs and lows, and then pick a direction. You see what I'm saying? So we want to look for those 2 to 3 sideways 5-minute candles. Or if you're on the 1-minute chart, you want to give it a good 10 to 15 candles, and you want to let that thing establish a range. You don't want to just use 3 1-minute candles. The results are not favorable, but I think that it is worthy to experiment with. That's why I said this is a journey of a lifetime. You'll be experimenting with so many different strategies. So I think it is worth it to experiment with. But it's much better, I believe, to stick to that 15-minute rule. It doesn't matter if it could be on the 5-minute chart, the 3-minute chart. Maybe you want to give it 3 3-minute candles. That'll give you at least 10 minutes. 4 3-minute candles, 12 minutes, right? Okay. Now, at the break of the range, if it's a long play, we buy with a stop just below the bottom of the range, and then we scale out according to our reasons to sell list. Now, if it's a short play, we short the breakdown spot, right? We short the breakdown spot with a stop just at the top of the range. In case the stock tries to poke through, we get stop out. So, because if it comes back up, you don't know how high it's going to go. And then again, we scale out according to our reasons to sell list. Now, this setup looks the cleanest on a gap up. This setup looks the cleanest on stocks that are gapping up or gapping down, and only then will you see that they are able to establish clear major supports or resistances. You see? Right, but still, when we look at our gap charts, remember those. We're gonna go back over this again. We're gonna be going over a lot of this stuff again. But when we're thinking about a gap, right, we want a stock that's gapping up, right? Like clearing a range, clearing everything that's next to it. It can look to the left, it can look to the right, doesn't see anything. Ooh, almost had to sneeze. If it's gapping down, we want that thing, we want it to be no action to the left of it. No action to the left. Nothing. We want that thing to be clear so that when it starts to form its opening range breakdown, if it's a short, it's all we're looking at is that price action. We don't have to look at anything like next to it. So let's check out some examples of this ORB so we can like see what I'm talking about here. All right, so this is SQ, right? So this is perfect, right? This is the 5-minute chart. Now this is how I learned it. But again, I gravitated away from the 5-minute chart. I really don't like the 5-minute chart because I'm always wondering what's going on for those 5 minutes. That's why I gravitate towards the 1-minute chart. So you got your 1-minute chart. Say you would have took a 1-minute ORB, right? And within these 5 minutes, it would have popped up maybe 2 candles and then started tanking on you. You see what I'm saying? But then it wasn't even really the tank. You see? So that's why it's better to wait for at least, you want to give it 10, 15 minutes. Let it really clear that range. Know that a range has to be built, unless it just spikes up and then gives you a flag. But we could talk about that later. But for the opening range breakout, it's exactly what it sounds like. It's a range that forms at the open. So look at this here. Candle pops up, like look at this gap, right? Gaps up. Look at all the space next to it. We're not looking at anything next to it. We got all of this we need to focus on right here. Boom, starts to pop up, then starts to go sideways. Comes down a little bit on low volume. See, you got a little bit of your pullback there, but it's still forming that range. Boom. Then, as soon as it comes back to this 9 exponential moving average, it starts to bounce, right? It starts to bounce, and then it breaks the top of this range. This will be the top of the range. This will be the bottom of the range. See, but since this is the gap up, we want to go long. It pops the top of this range, boom, on strong volume, biggest volume of the day looks like, right? Even bigger than this volume, unless my thing is blocking it here, right? Boom, breaks the top of that range. Then you see this thing start to trend up, boom, and when it goes from 91. We wouldn't have had to sell to at least, 92. You could have got $1 out of that thing. You could have scaled that up here at 93. So I see now this is the 5-minute chart. So these candles are sitting around for a long time. 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes. Ugh. See, I'm used to the 1-minute chart. That would have been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes. You see, if I was trying to catch something like that on the 1-minute chart. The 1-minute chart, that would have been how many candles? You see what I'm saying? It would have been 45 candles. Would have been a bunch of stuff happening up in there. But then, see this thing pull back. It dips below the 9 exponential moving average just a little bit. If you would have been hugging this moving average right here, you would have got stopped out. But then, if you would have put it under the 20, say you would have had half on the 9 exponential moving average, another half on your 20 exponential moving average, you could have let your 20 really ride this thing up. And for a nice gain, this thing went from... It broke out from $91 to $95, $96. See what I'm saying? So that's an opening range breakout right there. Opening range. Boom. Boom. Right? Let's see what else we got. So this is PLNT. Now, remember I was telling you guys back in the previous classes that these setups are like a confluence of one another. Like these setups, they all have their special characteristics to them. But this is again 5-minute chart, ORB, right? Now this looks like our umbrella hook, doesn't it? Looks like our umbrella hook. Looks like a pullback. Right? We get a nice little gap, right? Nice little gap up. Stock opens here. Dances around on top of support. Rounds and then pops. Gives you that 3 5-minute candles. 1, 2, 3, 15 minutes. Finally breaks it. Boom. Breaks it, right? And then forms a base on top of the breakout spot. You see, forms a base on top of the breakout spot. Right? But say you bought that ORB right there. You would have popped up right there. You would have came back down to the moving average. You buy this ORB right here with a stop just right here. Then you gotta let it go. You can't worry about the sideways action, even if it just goes sideways all day. If it doesn't stop you out, then it doesn't give you a reason to sell, right? If it isn't, until it gives you, 1-to-1 or 2-to-1, that's when you can start to think about taking profits. Look at this thing, just starts to round out here, bounce off these moving averages, bouncing off the VWAP, then starts to push higher. Pulls back to the 9-minute moving average, push higher. Goes sideways again, push higher. You see what I'm saying? So, I mean, this PLNT was freaking hot. What day was this? September 25th, 2018. This thing was hot. You can't deny that. This thing went from about $50.75 all the way up to $53.50. That's a good $3-4 move in one day. You see what I'm saying? All from being in your ORB. The ORB is hot. The ORB is hot. Let's see what else we got. So we got BRZU. Nice gap up ORBO. Opening range breakout. All right, so look at this BRZU, right? This thing was gapping up here. Look at this. Now, it looks like nothing right here on the daily chart, right? The daily chart, we want to see a nice clean gap, right, out of a pattern. But this was nice, though. Came down here, bounced off of this support area right here, 16 bucks. And then this is the gap right here. Now, it looks small over here. But then it looks huge right here, right? This is our eyes getting used to the charts, guys. This is our eyes getting used to the charts. So check it out. Now this is the 1 minute chart. We got 1 candle, 2, 3, 4, 5, 6 minutes, right? Then you finally get a pop above it. You see? Now I put this line here. You can't take finicky downtrend resistance. Like I said, every trader is a growing trader. Every day I'm growing and getting better as a trader. Every day I'm growing and getting better as a person. But specifically as a trader. And the more time that goes on, I realize how much I just want to stay away from finicky downtrend resistance. And I want anybody who proposes to be a student of mine to stay away from finicky downtrend resistance. So you won't experience unnecessary losses. You see what I'm saying? Try to get this thing, but it doesn't pop above resistance, horizontal resistance, and then it fails on you, right? So this thing popped above horizontal resistance right here, right? Just a little bit. Look at that big volume that came in there, right? Woo, right around here. Boom. Then you in that puppy, right? You in that puppy. It gave you a 1 minute range. Now look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. If you were looking at the 5 minute chart, it would have broken already. It would have broken already. So sometimes that's why I say it's worth experimenting with the 1 minute chart, because the market is forever adapting. It's forever changing. You see what I'm saying? We're not in that past bull market. We're not in that bull market. We're like dipping crazy down, like dipping down really crazy now. Like check it out. No, this market's still hot, son. This market is still hot, yo. Look at this, guys. This market is still freaking hot, son. So it's like so look at this top we put in back here in back around September. Then we got the big flush. I'm trying to make a lower high over here. Still at this resistance level, right? It's probably gonna break this thing. But we're not in this part right here where we could wait on a 5 minute chart. we're in this distribution part right here where it's really choppy. It's not respecting the moving averages. You see what I'm saying? It's not respecting rules of technical analysis. Look at this big drop down. Come back up here to this resistance level. It didn't reverse. It freaking popped right back through it. Like, this thing is like a runaway train. Runaway freight train. So this market could freaking run up again. It could do another one of these right here. It could. It could do another ramp like this, you know, for the next couple of years. And that's real. And I'm ready. I'm ready. I'm ready to eat, son. So, but right now we're not there. But look at this. This is your 1 minute ORB. Like I said, you want to be a person that does ORBs. You want to master the ORB. You want to see how the ORB looks on multiple time frames. You might want to give the 1 minute ORB a chance. And if it doesn't ORB in 1 minute, you see, you also want to be using your volume. Look at the volume on that third candle, right? These are people that might have been taking it for a nice, that 1 minute umbrella hook, but it slammed down on us the next candle. But it got caught right here. It bounced. Like, this is trading, man. This is gravy stuff right here, man. So then it goes sideways, and it finally breaks, you know, 5 minutes. So, you know, that's your sideways range nonetheless. Give you a nice opening range. You know, you could do it on a 1 minute. You can look at it on a 3 minute. You can look at it on a 5 minute. It starts to get a little dicey when you try to go to the 10 minute, the 15 minute, because it'll just be one big candle. You won't know what's going on. You know? But then look at that 1 minute ORB. If you played the 1 minute chart, you would have been in it from 1725 to, you know, about 1775. You know, 5 minute chart, you'd have been in a little bit longer. You'd have been up here to about, you know, almost, you know, 1785 or something like that. Right? Depending on where you were trailing your stops. Say you would have had your stop on that 20. I'm looking at that 20 over and over. I'm like, man, my 20 moving average be doing me justice. You know, on multiple time frames. That 1 minute 20 moving average be holding you down. Sometimes the 50 moving average take a little long time to catch up. You see what I'm saying? Let's see what else we got as far as ORBs are concerned. But you get the gist of it. It's that sideways action. Let's look at Roku. Gap up ORB. Okay, so this is the daily chart for Roku. So this was this day right here. August 24th. And it gapped up over this resistance level, right? Just slightly, like not anything huge, but it did, right? So check it out. Look at this thing. So what chart is this? This is the 5 minute chart again. Now see? Got a nice gap. Boom. Right? Starts to go sideways. Tries to go up. Candle gets stuffed. Right? But it doesn't flush. Next candle tries to go up. Gets stuffed. Doesn't flush. Next candle starts to flush a little bit. Then bounces, bounces off of your non-exponential moving average. Boom. Then he starts to make its way back up. Now you see he starts to give us our umbrella hook, right? Starts to give us our umbrella hook. This is our entry for the umbrella hook. This is your entry for the opening range breakout because it just forms an opening range. Now I put this finicky downtrend resistance in there. You got some traders, a lot of traders out there, they taking that right there. Like, the thing is this, like, you know, you don't got to be greedy, man. It's not about greed. Yeah, it's about efficiency and getting in fast and stuff like that. But I'm telling you, man, I experienced a lot of losses as a result of trying to take this finicky downtrend resistance right here. Taking it, and then it runs into resistance, comes back down on you, does whatever it wants, and then fails on you. I'm taking so many losses because of finicky downtrend resistance. Just because it runs into horizontal resistance and then fails. But look at this one. Boom. Cracks that freaking resistance level right there. Goes sideways, pops off the moving average, sideways, pops off the moving average again. I mean, so this Roku was hot on the 5-minute chart. It was hot. You wouldn't have had to get out to at least right here. If you would have trailed it up to 20, up to 9 exponential moving average, you'd have been stopped out a few times. See, that tells me again, gravitate towards the 20 exponential moving average. Even if this was, what I've learned is that the if you use the 1 minute, the 50 moving average on the 1 minute is equivalent to the 9 exponential moving average on the 5 minute. So that's something to take note of, because when you're on the 1 minute, you want to catch these big gains, but on the 1 minute, we would have been stopped out. Would have been stopped out with the 9 exponential moving average on the 1 minute. So we would have had to use the 50, but then the 50 would have been stopping us out up here. You know, I mean, we could have finally got out, right? And then even the 20 moving average kind of stops you out in the same place that the 50 moving average would have stopped you out on the 1 minute. So that's just something to be mindful of. But right now, I just want us to focus on this opening range breakout. You got the low of the range right here, put a stop right there, and you got the high of the range right here. You buying that thing. You're buying that thing for however much you want to risk on it, $20, right? Say you from here to here. If it comes back down, you risk losing $20. From here to here. If it comes back down, you risk losing $50 to try to make 2 to 1. So if it goes up, you know, if it goes up, boom, that's $50. That's another $50. You got $100 right there, right? Then you can let some run for the lotto shares. 1 second. Let's see what else we got here. So that was Roku. Let's check out UNH, gap up, ORBO, opening range breakout. All right. So this is ORBO here. Small gap up, not anything really major. It's not really clearing the pattern. I mean, you got a little bit of a flag pattern here, but it's not the best thing you're ever going to see. It's not. It's not. Trust me on that one, man. So look at this thing, but nonetheless, you got a gap up. Boom, clear gaps. That's why I said sometimes I might have to redefine, you know, how I'm playing the gaps, you know. But look at this thing. You got a gap up. Look how it just gives you that strong candle right on top of the 50 moving average. Oh, that's so great, isn't it? Then it starts to go sideways. Now, this thing starts to wedge out. It starts to do like a little bull flag. But still, that is your opening range. Doesn't matter if it's a bull flag, it's an opening range. The range is the flag. And then what the flag is doing is giving you a tightening range. So, again, you know, I apologize for this finicky downtrend resistance, but, you know, flag is a flag. Now, you got some traders that are taking it here. I mean, you can take it there. You can take it there. If you're trading from a position of strength, you have much profit cushion on you, you can take it there. But if you, in the beginning stages of your trading career, I strongly urge you, man, to like, just wait for that break of horizontal resistance. Wait for the break of high of day. Boom, it pops up here. You would have bought it. Yeah, you would have missed these two candles. You would have bought it, but you can safeguard yourself, and you can have more of a certainty that it might continue. So you get in there, manage your risk to the low of that base or even low of day under here, just to give it all of these cushions. Like if it comes back down, it's got to break through the 9, it's got to break through the 20, got to break through the VWAP, got to break through support right here, got to break through the 50 exponential moving average and low of day. It's got to break through all of that stuff if it wants to come down. Look how strong this stock was, huh? But it didn't do any of that. This thing popped up, pulled back a little bit, some profit taking, then bounced off of this moving average and just started to grind higher all day long. That's what you want. That's what you want. And this was on the 1 minute chart. So look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 minutes. That would have been your 3 sideways 5-minute candles right there. That's why I say it's worth it to play the 1 minute ORB, because you get to see what's going on. And also, what do we have here? A little bit of an umbrella hook. So we got all of these multiple setups that are pretty much the same thing. This is what trading is. This is what I wanted to show you guys in the beginning of this class when I was telling you about how I wanted to show you how all these setups basically are just variations of one another. You got a bull flag, pole with a flag. You got a wedge. You got an opening range breakout, right? This is your opening range because it's the open. And then you have your pullback, right? Then you got your umbrella hook that I like to call it. Umbrella hook and break of high day. You got a higher day breaking in. All of these setups, 90 MA bounce on all this stuff. VWAP bounce. But look at this thing. This thing pops up and just runs from daggone 262.50 to almost 263.50. That was a dollar move for you. You had 100 shares, $100. 200 shares, $200. 300 shares, $300. 1,000 shares, $1,000. Just like that. So that's great, man. That's great, man. Let's see what else we got. So this is NTNX, opening range breakout. All right, so this one didn't really gap up. It actually opened from where it closed. As we can see, this is your daily chart here, hence the D, hence the months, right? And then this is your intraday chart, hence the 5-minute, hence the time frames. And look what it does here, right? It gives us that range, but this one doesn't break out in 5 minutes. Look, if this is 4 p.m., then this is 9:30, right? 1, that's 5, 10, 15 minutes. That would have been your 3 sideways candles right there, but it still just danced around inside the range. Look at that. Finicky downturn resistance. Look at these wicks telling you there's a lot of sellers in there. Sellers want this thing to go down, right? Look where it was. It was on the moving averages were on top. Sellers was like, yo, this thing is going down. But what actually happened was it started to push higher. And the sellers got squeezed. Shorts got squeezed. And what did this thing ended up giving us? It ended up putting the bottom in here, putting the bottom in here. That's your double bottom, right? Bottom here, double bottom, or high or low, right? And then it starts to push up. Comes to high of day right here, and finally breaks it. That's your range. From here to here, right? That's your range. That's your opening range. You get your opening range from the first couple of candles. Boom. And we have traders, we have to be witty enough and adaptable enough to spot these things in action and capitalize on them. You see, so this thing right here, right? As it breaks the opening range, that's our buy signal right there. No matter what happens in here, that's our buy signal. Because it breaks high of day, right? All of this force right here. We got to get that. Boom. With a stop either below your moving average or below the whole base. Say you want to risk $50 on this thing. If it goes up the same amount, that's $50. If it goes up twice that, that's $100. You get the picture. Say you want to risk $500 on this thing. Goes up there, boom, goes up there. Now, if your account's big enough, you're doing this stuff on a daily basis. So, to some people that's watching this, they may say, "Oh, well, I ain't risking no $500 on that," and that's because you just can't do that yet. You can't do that. Notice the keyword "yet." Once you're building up your account from, risking $25 on a trade like this to risking $100 to risking $500 on a trade, you're gonna see that, risking $500 on a trade is not a lot of money. But this thing pops up here and it doesn't give us a reason to sell all the way to right here, 55.50. So it goes from 54.50 to 55.50. That's a whole dollar move for us. That's hot, and that's what we want to do every day. So that's your 5-minute chart. On the 1-minute chart, it would have been a whole bunch of chop, but you would have been able to see it. Like after a while, once you start looking at charts for a while, you'll be able to see that round in action. You'll be able to see what it's doing, and then you can jump in there and get it. You can jump in there and swim with the sharks because you know you got a harpoon. Now this is CLI. Alright, so the daily chart is not on here for CLI. I can pull up the daily chart. This was on August 15th. Now look what we got here. Right? Look what we got here, guys. Look at that. And this is the 1 minute chart. So this is your 1 minute ORB, right? Stop gaps down just a little bit, but it gapped down right into the support area. Look at that 50 moving average. As soon as it went to the 50, 50 pushed it back up. All them buy orders right there, boom, sucked it up. Let me get that. Then we get 3 sideways 1 minute candles. And then look at this thing. Pops up. The volume on that break wasn't that strong, right? But see, markets change, guys. Markets change. Look at this thing. Pops up here. We're buying that, right? If you're taking 1 minute ORBs, treat this as a 5 minute ORB. That's what you want to see out of a 5 minute ORB. But if it's your desire to go ahead and become the 1 minute ORB master, then you got to take that because that's your setup. And the thing about the 1 minute ORB is that your risk is a little bit smaller, right? Because you can manage it from there. Instead of a 5 minute, you know, the range is bigger because the candles are bigger. They're dancing around a little bit more. All of these candles happening inside. This would have been 1 5 minute candle right here. Boom. Right? And then you would have tried to catch it here. 1, 2, 3, 4, 5. Then the next candle would have went up, that 5 minute candle. 1, 2, 3, 4, 5. Would have came down on you, went sideways. Next 5 minute candle. They would have been ramping in your face. You wouldn't have been able to do nothing. You should have been standing there. Well, look at that 1 minute ORB. It would have got you in the stock pretty early, right? You would have seen something. You probably would have scaled out a little bit here. So it got you from 2030 to about, you know, almost 2050. You wouldn't have had a reason to sell to, you know, at least 2060. That's 30 cents. You know, like I said, you got 1,000 shares and you're only risking, you know, 5 cents. That's $50 with 1,000 shares. You know? But then if it goes up $1, you're able to capitalize on that thing. So that's why I say so many different variables how you can capitalize in this game here. But this is a nice opening range breakout. That's hot. You know, and then it starts to give you different setups right here. You know, finicky downtrend resistance 1, finicky downtrend resistance 2, finicky downtrend resistance 3. You know, as it's bouncing off of your 50 moving average. But you know, like I told you before, your mindset is going to allow you to capitalize on these stocks or not. It's going to be your mindset that allows you to capitalize on it. Like if you have profit cushion, when you have profit cushion, then you can take these kind of setups here with confidence. But if you don't have any profit cushion, you cannot take these setups with confidence because you don't know what's going to happen. Let's see if we can find a daily chart for this thing. That was August 15th, 2018. CLI. OMG, right? Look at that, man. Look at those 2 days. Boom, that was the 14th. And this was the 15th right here. When it came and then just ran. It had so much momentum. And then it just ran. This thing went from 20 $20 to $21.50 in that one day. So, but still, those some nice huge candles. So it must have did a nice run like this the day before, as we can see. Let's see what else we got. Man, I can't wait to finish this project, man, and move on to the next one. So that was CLI. This is VIXY. Let's see what this one is. Can't be having that, yo. Trying to cut up on me last time. All right, guys. So what is this? This is the 1 minute chart. Check it out. Stock gaps up. Look at that big gap right there, right? Clean gap. And we got 1, 2, 3, 4, 5. Now look, if we would have took that 1 minute ORB right there, right? Look what would have happened. This is why I tell you guys that if you're going to do the ORB, you want to at least try to give it 15 minutes. But, you know, how can you deny that? How can you deny that? If you try to do it on the 1 minute, you're going to get hit with some, you're going to take some paper cuts. You could take paper cuts on any time frame, really. But just look at this thing, right? Say you would have tried to get that right there. That's valid. That would have been a valid opening range breakout for the 1 minute. Then it would have popped up 1, 2, right? Then reversed on you, right? You'd be like, oh, you would have been saying to yourself, oh man, I should have waited for the 5 minute ORB, man. You would have been saying, you would have been saying to yourself, I should have waited for the 5 minute ORB, man. This 1 minute ORB don't work. That's why I said, when you pick a setup, you got to dedicate yourself to this thing, man. You got to dedicate yourself to that setup and seeing which ones of it don't work, seeing what's more worthy of doing. You see? I have not tested this the 1 minute ORB that much. I've taken a lot of different trades, a lot. But as far as focus is concerned, I've taken these, and each decision has led me to where I want to be now, which is I don't wait for this right here. Even though this is valid, you can be a person that does that. There's nothing wrong with that. But I don't want to do that. This is all I want right here, the umbrella hook and break right here. I don't care how many candles it does. As soon as it comes and does that, I want it. Because that's what I see working in the market today. So look what happened if you would have caught that. Even with a stop right here, you would have got stopped out. As soon as you would have bought it, it would have rolled over on you. But then it would have got caught by the moving averages. So then you could have been like, all right, I know that the 5 minute range is the more sound way. So you could be like 1, 2, 3, 4, 5 minutes. Switch to a bigger time frame, right? Switch to a bigger time frame. If you want to do an ORB, maybe you can just wait for the 15 minutes. Or automatically just wait for 15 minutes no matter what, even if you like trading the 1 minute. But then you might miss some runs. That's okay. That's okay. You got to be all right with missing money. You got to be all right with leaving money on the table because, you know, as a trader, we're going to be able to get this. We're going to be able to get the money like an ATM machine. Bing, bing, just give me. So look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, right? So that's your 15 minutes right there. Then, right here, on minute 16, that thing pops the high of day. Now you gotta be like, all right, that's the break of my opening range. It broke that high. So you gotta get in it. Look at that nice umbrella hook right there. Boom. That's the real one you want to get in. But then that's your opening range. Low of the range here, high of the range here. If you was doing a 1 minute ORB, this would have been the low of your range. And then, you know, this would have been the high of your range. It would have broke it right there, but then it would immediately slam. You might want to hurp and get back out. Maybe you would have anticipated it right here. And then you might want to get out flat. You see what I'm saying? When you become a seasoned trader, if 1 minute ORBs are your thing, then you'll be able to do that. You know, but as a new trader, you want to practice this first. Do not put no real money on the line at first. Practice this thing and get some conviction in your decision making, man. You got to practice this thing, man. Do not be losing unnecessary cash. You don't have to. You don't have to. You don't have to. And that's just plain and simple. So we would have been in this thing for the break of the opening range. With a stop loss trailed above this non-moving average. Would have been in it from 26.50 to, look at that, 27.50. Would have gave us a whole $1. Would have been done for the day in, you know, less than an hour. That's hot. That's VIXY on August 15th. Wow, small gap up day, but nothing really crazy, right? Nothing really crazy. Look at this. This was the day right here. This was the day. This is August 15th. The day that we're looking at in question. And we still would have got $1 out of it, but look at that. Moving average right on top. We could get some juicy days we can get, guys. I'm telling you. Just you guys stay tuned. Don't move out of your seats. Don't change that dial. For when the next presentation comes out, it's gonna be something to see. See, I'm just going over this old stuff because I already prepared this. Like, so many people were asking me about it, and I prepared it for them and myself, and you know, future generations and people of today. But just stay tight in your seats, man, for the next one. I mean, it's gonna be sick. It's gonna be sick. So this is SRTY. Look at this. Now it gives us our opening range, right? This is our opening range right here. What is this? A 1 minute time frame. You can see I started to gravitate towards the 1 minute. This is how you gain conviction, by sticking to a time frame that you like. You know, sticking to the setup that you see, and then stuff starts to pop out at you. Like, I'm looking for opening range, but look what it gave me. An umbrella hook. You see what I'm saying? At the time, I may not even seen this umbrella hook. I may have been like, okay, that's a range, that's a high, that's a low, and then that's the range. It broke out. Because it's your job. Once you learn something from somebody, you have to go confirm it yourself. You have to go, like Tim Sykes said, you got to study. You got to study, man. You got to study. You got to get out there and study, man. So, look at that. From the gate, starts to fade. Boom. Leaks off the VWAP here, but then it starts to round out at these moving averages and gets caught. Starts to hook. You want that. You want that. That's what we want every day. Woo! You guys got to see this, man. I know, I'm sorry, man. I know. I'm not sorry, but I got to show you guys this. Look at this thing, man. This gold Lamborghini was hot. Look at this, guys. You guys got to see this, man. Look at this, guys. Look at this. Yo. Look at this. Look at that Black Panther right there. Look at that. That's fire, son. And look at that, what is that, Bentley? Oh, Rolls Royce. Woo! That's hot. Look at this thing. That is hot, son. You can't front on that. Woo! That's hot. Let's see if we can see the guy in the camera. That's him. I like seeing the cameraman in these shots. They be trying to hide the camera. That's hot. He was on a skateboard. Watch, watch. Look at that nice movie room, right? Yeah, that's hot. Man, these houses be hot, man. I gotta save this one. Anyway, let me just save this to my playlist real quick. And we're running that back. So this thing gives us a nice almost a dollar move, breaks out from 22.65, breaks the opening range, and we wouldn't have this had to sell to at least, you know, up here at 23.20. So not quite a dollar, but still that's a lot. You know, if you had 1,000 shares of that thing, that's a couple $100. You see? Even if you had 100 shares, that's still enough to pay your phone bill in one day. See, this you want to focus, like I heard when the traders say, you want to be able to, you want to start by, you know, seeing if you can, you know, pay a little bill, pay a small bill, try to make $40, try to make $20, $30, $40, right? You know, $50. See if you can cover your platform fees. See if you can cover, you know, your little phone bill. See if you can cover a light bill next. Then try to match your income, you know. And you start going for big gains. But it's all about getting comfortable with the thing that you want to do. So this is hot. This is hot. I want to find more of these and I want to hit them. So I want to show you guys that it is possible, man. This is possible. I want to show you guys. I want to give you guys some hope. A lot of people don't have hope. A lot of people don't have hope for themselves, hope for the future, hope for the afterlife. And I want to be one of the ones that can give you guys hope, man. Don't lose hope. Now this is LABD, right? LAPD. Look at this thing. What's this? 1 minute chart. Boom. Pops up here. Now we know in our head, we like, all right, we tried to do that that opening range breakout on the 1 minute, but you know, that thing wasn't really good, right? We learned from Kunal that we need to wait for the 5 minute. We need to wait 15 minutes for the market open. We can't just take that first 3 minutes. Ross Cameron be doing that stuff. Ross Cameron will freaking buy it as soon as it spikes up one time. He'll buy it. And then he'll have a buy order ready, and then a sell order ready. He hit his hotkeys like this. Boop. All right, that's it, guys. I'm up. I'm up already. $900. $29,900. We're like, yo, what? Y'all didn't even see anything. That's Ross Cameron for you, man. But so look at this range here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 minutes it takes to break out of that range. Also gives us a little umbrella hook, kind of. Give us a little pullback, right? Right? Some pullback, people are taking it right there with a stop right there. Look, you could have been in the meat right there, right? But I'm good on that. I mean, look. It's going to be some people out here that's going to take this strategy and be killing it. Some people are going to hit me up. They're going to be like, yo, man, yeah, that pullback one, I didn't even know about that until you told me about that, man. That's hot. Yeah, I've been doing that pullback, man. I've been making a lot of money. That opening range breakout pullback you've been talking about? Yeah, man, thanks, man. Appreciate that. And I'm like, yo, man, that's what's up, man. I'm like, give me a testimony then. You know what I'm saying? Because people going to be doing it. I don't want to do it, but it works. I like you. See, this is the thing. You got to do what you feel comfortable doing. It's going to be some people that feel comfortable doing that. Not everybody's going to be broke. Some people's going to have money to use and trade with. That's the thing. You don't want to be trading with your last paycheck. You don't want to be trading because you're going to be stressed out. You got to build your bankroll, man. That's why I say you building your bankroll and you building your knowledge base too. That's why I say even try it on the simulator. Try it on the simulator until you gain conviction enough to go ahead and put some money in the markets and be like, all right, this is what I want to do. And then you just do it. You see, so we get the breaker opening range, little sideways action, and it starts to push higher. It's all on the 1 minute. And we wouldn't have a reason to sell to at least right here. So we would have been able to take this thing from 26.60 to 27.30. That's about 90 cents. Nice 90-cent gain. 70-cent gain. Is it 90? No, 70 cents. 100 shares, $70. That would have been a $2,700 position. You made $70 in, you know, an hour. From here, 9:45 to 10:15 is not even an hour. 30 minutes. $70 in 30 minutes. It's $140 an hour, your pay rate. So that's the very last one for today. I'm gonna stop it here. This opening range breakout class was fun. It was nice and easy, and you know, I'm so happy and grateful that you decided to watch this video to support me and increase your knowledge of trading, and not to support me, but to offer me the chance to help increase your knowledge of trading, and hopefully help you get a little bit closer to your goals and dreams. So that's about it. My name is Abdul Bia, and over and out. What happened to my mouse? Oh, homework section, right? You know, guys, go ahead and look for some ORBs. Let me see. You know, don't just fall off of this video. You know, go ahead and look for some open range breakout. Look for 10 opening range breakouts. You know, look for them on the 5-minute time frame. Look for them on the 3-minute time frame. Start looking for them on the 5-minute time frame first. Look for them. Look for opening range breakouts in stocks that have gapped up, right? And use the 5-minute intraday chart to spot the opening range and look to see how you would have traded it. Look to see how you would have traded it. Start with the 5-minute time frame. You know, then you can probably go to the 3-minute or the 1-minute and look to see how that same opening range breakout would have played out. And then hit me up. Hit me up and let me know what you found. That's homework. Remember, man, like Jay from Eat, Sleep, and Profit told me, what you put in is what you get out. There is no secret to trading. It's no secret. What you put in is what you get out. What you put in is what you get out. So if you're saying it don't work, then it's because you ain't putting in the work. I know it works, or else I wouldn't be wasting my time. There's no way I'm going to put this together if I didn't see it work. I just showed you 10 examples of it work. Oh, that's just 10 examples. Whatever, bro. I know it works. And that's why, like, if I die today, I'll tell my wife, look, put in my will, you make sure my kids see this presentation. And you make sure they freaking change it. You make sure they make it happen. Because this works. It works. That's it, man. I'm out of here.